Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to look at this company that has given 13% dividend growth for the past 5 years. So if you're interested in and want to know what this company is, sit back, enjoy. As always, please remember that this is not a financial advice. I'm not a financial advisor. If you are new to the channel and this is something you're interested, definitely hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on new videos that I put out. With that said, let's take a look at this company. This company is called Trane Technologies. The ticker symbol is TT. Basically, it is a company that designs, manufactures, global climate innovator. They provide efficient and sustainable solutions to buildings, homes, and transportation. So they basically do like commercial heating and cooling systems. Founded in 1871. Headquarters is in Swords Island. So if you look down to their website, you know, some of the things that they're doing is reduce carbon emissions. You know, so one of the things too that I like about it is that if you go to the website, you can see 21% of leadership positions was held by women in 2020. So that's pretty awesome to see. Now, if we look down to Yahoo Finance, again, the market cap is about 47 billion. P ratio is about 36. Looking at the forward dividend yield is about 2.36. Now, if you look closely over here, the fair value of it is undervalued. So we're also going to check another source to see if it is what they say it is. Now, if we look down to the earnings, you can see there was a beat and then there was a miss. Now, if we look down to the financials, you can see it's kind of like up and down. In 2017, it was a little bit higher. Now, if you look at 2020, the revenue is 12 billion, whereas in 2017, it was 14 billion. So it fluctuates down. So I think in 2019 it was 13 billion and then it went down to 12 billion. So now if we look down to the trends, it's a mixture of holds, buy, and a strong buy. Recommend rating right now is a hold. Now if we look down to, again, Yahoo Finance under the charts, I wanted to see how they've been performing. So the blue one is the S&P 500 and then this is the TT. So you can see, as you can see, this is the Trane TT and this is the S&P 500. So you can see pretty much has been beating the S&P 500 the past 5 years. So if you go in the 2-year mark, you can see pretty much the same. 1-year mark has been pretty good. So I look at the 5-year one to see. So pretty good performance the past 5 years. Now if we look at Simply Safe Dividend, based on the dividend safety score, they rated at 70, which is safe. The dividend yield is a 1.17. Market cap is about 48 billion. Looking down at the key metrics, you can see they did do a cut during a recession in the 07-09. Payout ratio is about 40%. Dividend streak is 10 years without a reduction. Looking at the dividend growth, you can see the last 5 years, 13%, which is very fast. Last 20 years, 10%, which is also fast. You can see here that they had a cut on 2010. After that, it's been growing steadily up, so it's uninterrupted the past 10 years. 0 consecutive years of dividend growth streak. So payout details, you can see ex-dividend date has passed December 2nd. So but your frequency would be quarterly, which is in March, June, September, and December. Annual payout about $2.36. Now if we go to on the next one, which is Tip Ranks, based on their analysis, they rated it as a moderate buy. There's about 2 buys and 4 holds with the price target about 201. Currently right now is about 202. Now their price target for the next forecast, 12 months forecast is in the high of 217, average of 201, and the low of 183. Now if we go to CNN Business, based on their price forecast, it's a little bit higher. You get the high of 242, the medium of 205, and the low of 160, with the analyst recommendation of 14 holds and 3 sell. Now if we go to Webull, you can see pretty similar. They have a hold analysis based on 24. You got 58% that says it's a hold. A buy would be 25%. Strong buy is 8%. Now looking at the price target, is pretty similar to CNN Business, with the high of 242. 203 is the average, and 160. Now if we look down to the institutional holdings, you can see 313 have increased, 72 are new, 328 have decreased, and about 67 have sold out. Now if you are interested in starting your portfolio and you want to use Webull, there's a link in the comment section. If you use my link, you open up an account, you get 2 free stocks. Basically, if you look down, how do you get the free stocks? You open an account, deposit any amount, and then you get 2 free stocks. So the first free stock value about 300. So definitely check that out. Now if we go to bar chart, taking a look at their price target, you can see the high would be 226, the mean of 193, and the low of 160, with their analysis rating as a hold. So 3 months, pretty much the same thing, 3 months as hold. Looking down, based on the 13 analysis, is a breakdown of like 9 holds, 2 strong sell, 1 strong sell, 1 moderate buy. Now if we go to the chart, you can see moving the average of the 20 is the red, and then the 50 moving average is the blue. So you can see it's on an upward trend. It did cross the 50 20-day moving average in here. So if you look at the volume, the volume's been decreasing. You know, it was a pretty, if you look over here, it's pretty steady. There was a big sellout over here. Other than that, it's been steady, but it looked like it's been on decline. If you look at the MACD, there was a crossover here. There's another crossover here. So it might, if you look at the way it's going, it might go like this, and then hopefully it might go up. If you look at the Rizzo, it's in a good area where I like it. You'll want to stay within this area of 0.8 and about 1.9. So you can see that line. But I would wait for it to go down a little bit if you are interested in doing an interest position in here. So you might want to wait to see if it goes back to about 189. If it goes down here, so it's going back up, so it might hit over here, and then it might jump back down. Now if we look at simply Wall Street, based on their evaluation, it is overvalued. So you're pretty much paying premium price. So their fair value would be 134. So again, in my opinion, I would wait for a dip to see how it is overvalued, by almost close to 50% overvalued. So now looking at Robinhood, you can see for the week it's up 1%. For the month, it's up 6%. For 3 months, it's up 16%. For the year, it's up 40%. And then for 5 years, it's up 166%. So there was a big dip in about March 20, and another one, it kind of looked like it's in May 15. So if you bought it around this area, pretty much made some good gains. You know, it has been going up, and then looks like, you know, we'll see how it goes. But you know, it's I like this company, but it is overpriced, so you're paying premium. So I would wait for a dip, and that's just my opinion. So their analysis rating it as a hold as well, based on Robinhood's analysis. You look at it, the fair value is about 118. So they pretty much agree with what Simply Wall Street has been saying. All right, guys, that's it. thank you so much for watching. Hope you like this video. Don't forget to hit and subscribe. Hit that notification bell. As always, please remember, please be safe out there. Stay cool, keep investing, and I'll catch you guys on the next video. All right, take care. Aloha.